So you've got $10,000, and instead of letting it sit in a bank earning pennies, you question what's the best way to invest it without spending hours staring at stock charts and actually put it to work. But not just anywhere. 3 rock-solid Fidelity index funds. Not flashy, but proven. Now, what if I told you that this decision could take that $10,000 and turn it into something truly extraordinary? In this video, I'll show you and John exactly what happens when you do that. Where does the money go in a year? What about 10 years? 30 years? In the end, I'll show you one of the best Fidelity index funds for the current market conditions. One that can turn a $10,000 investment into a $700,000 portfolio that pays over $15,000 in monthly dividend income. Now, before we get into the actual funds, let's take a quick moment to talk about why index funds, and Fidelity in particular, are such a no-brainer for people who just want to grow their money without all the stress. Index funds are like the ultimate set-it-and-forget-it strategy. Instead of trying to pick the next winning stock, you're spreading your money across a huge mix of companies. Some go up, some go down, but over time, that balance helps your money grow without needing you to constantly watch the market. Now, here's where Fidelity stands out. They've been around forever. Their fees are super low and their funds are built for everyday people, not just Wall Street pros. That low cost might not seem like a big deal at first, but over the years, it can mean thousands of extra dollars in your pocket just from avoiding high fees. You also don't need a lot of money to get started. Many Fidelity funds have low or no minimums, so you can begin investing with whatever you have, whether it's $100 or $1,000. And because these funds are passive, meaning no one's trading constantly behind the scenes, it keeps things simple, steady, and far less risky. And that's the kind of strategy I'll be using here. Let me show you exactly how I picked the 3 Fidelity index funds that can turn $10,000 into something way bigger. Here we go. When I set out to pick these 3 funds, I had one priority guiding every decision: safety with purpose. Right now, the market is sending mixed signals. Interest rates are still high, inflation is stubborn, and there's global tension with tariffs and trade shifts that could shake things up even further. It's not the kind of climate where you want to gamble on trends or chase risky returns. So instead of chasing hype, I focused on funds that are steady, resilient, and built to last. The first thing I checked was long-term performance. Not just the big numbers, but how each fund held up when things got rough. I wanted funds that could stay strong through tough markets, not just during bull runs. Because let's be real, the next few years might feel a bit like a roller coaster, and your investments need a strong seatbelt. Then I thought about balance. I don't want 3 funds doing the same thing. One is tuned for long-term growth, another leans into consistent income and stability, and the third spreads wide across the global economy, giving you access to some of the most powerful trends without overexposing you to any single one. I also kept income in mind. One of these funds shines when it comes to dividends, which means you could start earning passive income even before you sell anything. The others, they focus more on building long-term value, helping you grow that $10,000 into something much more meaningful over time. And of course, fees matter. All 3 are Fidelity funds, which means they're low cost and efficient. Plus, they're easy to access. You don't need to be rich. There's no complicated process. You can start small, invest regularly, and just let time do the work. So let's get into it. Here's the first fund I picked and what it could turn your $10,000 into if you just give it time. Starting at number 3, we have the Fidelity NASDAQ Composite Index Fund with the ticker symbol FNCMX. If you're looking for a mix of diversity and long-term momentum, this fund is built exactly for that. Unlike a lot of index funds that focus on one specific slice of the market, FNCMX spreads out across the entire NASDAQ composite. That means you're instantly invested in over 2,800 companies. It tracks a massive cross-section of the most innovative, fastest-growing public companies in America. It holds Apple, Nvidia, Microsoft, Amazon, Meta, Alphabet, and Tesla. You're not buying one or two stocks, you're owning pieces of some of the most powerful drivers of the digital economy. But because this is a broader index, you're also getting exposure to smaller up-and-comers, and that's what makes it interesting. FNCMX has about half of its assets in the technology sector with 49.67%, followed by communication services at 15.5% and consumer cyclical at 14.51%. It's definitely growth-focused, but more balanced. It doesn't swing as hard in either direction, which makes it a solid middle ground option. That's why this fund can work well as a core holding, something you can build around and keep long-term without constant worry. Now let's talk about performance. Over the past 10 years, FNCMX has returned a solid 207.77%. What's also nice about FNCMX is the fee structure. Its expense ratio is just 0.29%, which is extremely low for its niche. That means more of your returns stay in your account, and it's a passive fund. No managers making emotional trades, just a clear and consistent strategy tied to one of the strongest stock indexes in the world. Even in the last 12 months, a pretty volatile year for markets, it still managed to stay in the green with a 3.87% return, and that says something about its ability. While it doesn't offer massive dividend payouts, it does deliver a small yield of 0.72%. Not huge, but every bit counts, especially if you reinvest. It also has an average 10-year dividend growth rate of 9.57% and an annual share price appreciation of 12.07%. So let's talk real numbers here because that's where things get exciting. If John put $10,000 into FNCMX today and just let it grow, here's what that could look like over time. After 1 year, that investment would grow to around $11,279. Fast forward 10 years, you're looking at $33,097. But stretch that out to 20 years and you're now looking at a portfolio worth over $108,000. And by year 30, that same $10,000 would snowball into $349,886. What drives these numbers is capital appreciation. That's just the value of the stocks in the fund going up over time. In fact, out of that, nearly $350,000, about $328,467, comes from pure growth. And thanks to dividend reinvestment, where the fund automatically uses payouts to buy more shares, you get another boost of around $11,419. Solid returns, right? Well, coming up next, we've got an index fund that could cross the $500,000 mark. And in the end, I'll show you one of the best Fidelity index funds for the current market conditions, one that could turn a $10,000 investment into a $700,000 portfolio paying over $15,000 in monthly dividend income. Next, at number 2, we have a growth-focused fund, the Fidelity Large Cap Growth Index Fund with the ticker symbol FSPGX. This one takes a smooth, focused approach to growth. It doesn't chase the highest highs or settle into the safety of income payouts. Instead, it carves its path by tracking the steady rise of America's most successful large-cap companies, making it the balanced middle ground between high risk and high reward. This fund is built around the idea that consistent growth across hundreds of top-performing U.S. companies can outpace the market over time, and it delivers. With 400 holdings, it casts a wide net, yet it still concentrates nearly 60% of its weight in the top 10 holdings. That includes Titans. Apple leads with 11.96%. Followed by Microsoft at 10.2%, Nvidia at 10.1%, Amazon at 6.89%, and Meta at 5.06%. Now, the fund sector breakdown obviously shows its bias toward technology, holding 48.6%, with nearly half its holdings there. But it's not one-dimensional. It reaches into consumer cyclicals, holding 14.82%, communication at 13.74%, healthcare at 7.4%, and even industrials at 3.32%, offering a well-diversified profile with a clear growth tilt. Over the past decade, FSPGX has returned more than 200%, and even in the past year, it's up 4.4%, weathering market volatility better than most. Its expense ratio is just 0.04%, which makes it incredibly efficient. And while the current dividend yield is just 0.45%, dividend growth has been strong, averaging 16.35% over the last 10 years. That means investors are seeing increasing income, even if it starts out modest. With an annual share price appreciation of 14.26%, let's talk about what that means for your money. If you invested $10,000 today and left it completely untouched, here's what could happen. After 1 year, you'd already be at around $11,471. Give it 10 years and that number will jump to $39,601. At the 20-year mark, it's $158,385, and if you let it run for 30 years, you'd be looking at a portfolio worth $641,219. About $600,633 of that is pure capital appreciation, but there's also an extra $30,586 that comes from reinvesting dividends along the way. By the time you hit year 30, this fund could be paying you $4,568 a year in dividends. And now finally topping today's list is Fidelity Natural Resources Fund with the ticker symbol FNARX. This fund takes a completely different route and is a powerhouse for stability and income. FNARX focuses primarily on energy and materials, the stuff the world literally runs on. I'm talking oil, gas, metals, and natural resources that fuel economies and build infrastructure. In an uncertain world where tech stocks, though the future, can swing wildly, FNARX offers exposure to sectors that remain critical regardless of market trends or shiny new innovations. This fund leans heavily into the energy sector, with 75.59% of its holdings in major oil and gas companies. ExxonMobil alone makes up 21.42% of the portfolio. That's followed by other big names like Shell at 10.76%, Imperial Oil at 10.26%, MEG at 4.78%, and Valero at 4.42%. These are companies with global footprints and steady cash flow, especially when energy prices rise or inflation takes hold. It also includes some exposure to basic materials, which helps diversify the fund a bit more. These sectors may not be flashy, but they're reliable, and in investing, reliability is golden. FNARX gives you exactly that: dependability and income. And what's even better is the psychological comfort this fund brings. It's less likely to crash during tech sell-offs, and its core holdings are in sectors that governments, industries, and consumers rely on no matter what's happening in the stock market. Oil and energy have always had ups and downs, but they never disappear. FNARX makes sure you have a stake in that reality. Now let's talk about the numbers. Over the past decade, FNARX has returned 27.23%. That's not astronomical, but remember, it's not designed to be. It's a slow and steady kind of fund. In the last year, it's down 10.48%, reflecting the cyclical nature of energy markets. But this is where the long-term perspective matters. Okay, so now let's talk about where FNARX really pulls ahead, and that is income. This fund pays a 3% dividend yield, which on its own is already solid, but what makes it even better is that its average dividend growth over the last 10 years is around 11.35%, and it still manages a steady 2.51% annual share price appreciation. That might not sound flashy compared to high-growth tech funds, but when you combine that consistent income with long-term compounding, it adds up fast. If John put $10,000 into FNARX and simply reinvested every dividend along the way, here's what that might look like. After 1 year, his investment would be valued at $10,551. After 10, $19,722. At the 20-year mark, it would grow to around $67,146. And after 30 years, John's investment would reach a solid $732,219. Out of that total, $656,497 comes from dividend reinvestment alone, while $65,722 comes from capital appreciation. By year 30, this fund would be paying you around $186,344 in annual dividends, or about $15,529 a month in dividends. Want to know how to turn a $10,000 investment into a $5 million retirement portfolio using ETFs? Click the video on the screen to find out.